if your call is global economic weakness and a strong U.S. dollar, how does oil work harder or work higher? I guess I'll start, and then maybe you can take it. But I think I did a video with Joe McMoneagle, who's our sector head for energy policy, and he talked about three key things, which were more on the supply side. But first, OPEC actually sticking with production caps. They've been pretty good about that, and his view is that they will likely stick through those caps into Q1 and Q1 2019. The second was Iran sanctions. To the extent that Trump re-implements Iran sanctions, there's an expectation that as much as a million barrels per day in production could leave the market in terms of Iranian exports. Then the last is just Venezuela. From 2016 to now, Venezuela production, primarily because of their financial issues, has gone down by about 600,000 barrels a day, and every month 50,000 barrels a day of Venezuelan production is leaving the market, again, because they're having serious production issues. So I think on the supply side, you have OPEC, Iran, and Venezuela that are really capping production. But in terms of the U.S. dollar growth, maybe you have a view on that.
Yeah. So if we can just roll back to the first slide, the oil is our protagonist slide there. You can see some of what Daryl just highlighted, plus the other catalysts that have driven the oil price higher here more recently. But I think if you're talking about persistent dollar strength, in persistent trending deceleration in global growth, I don't think you continue to accelerate. I think you price in some of these geopolitical risks or idiosyncratic risks, but maybe you don't continue to go vertical on the oil price. It probably comes off, but in the meantime, there's a lot to traverse here, right? So if you're talking about oil where it is now, you're going to be up, I think, almost 30% year over year on a monthly average basis in April,
right.
Where oil comps trough in June. So I think in February of last year, we were up 29% year over year. So that was your comp going. That was part of the reflation's rollover call for this February. That was your comp. You probably weren't going to accelerate against that from 2017. But those comps progressively eased down to, they were up 0% year over year in June of 2017. So that's your comp for June of 2018 looking forward.
Yep.
So if we hold current prices, you're going to be up 44% year over year in the oil price in June. And you're going to see that show up in the headline.
Yep.
So we got to traverse that kind of and it's a little bit of a thread the needle dynamic for as it relates to inflation and what you're going to do with that.